Being a farmer is a very tough job, to be honest. You go around looking for cows that will in return provide some milk so that you can earn some money. But the interesting thing is, will the farmer buy a cow that is dormant in its ability to provide milk? Or will the investor buy a stock that is doing nothing? You might be thinking you clicked on the wrong video, but what good is money that is not working for you to produce even more money? Bitcoin has taken hold of everyone's imagination, but the greatest investor of all time thinks otherwise. In this video, we'll tell you why crypto might not be the right way to go about your financial independence, and why Warren Buffett shocked everyone by saying he wouldn't buy all the Bitcoin in the world for $25. Crypto has taken the world by a surprise in the last few years, but according to Warren Buffett, you're always dependent on someone else's interest in Bitcoin in order for you to make money. Buffett also stresses that it's almost certain that crypto will come to a bad ending. This video is a must-watch all the way through, regardless of your opinion on cryptocurrencies. Welcome to 5-Star Finance, the place where we teach you how to achieve financial freedom. Crypto is a genius and blockchain technology and is very important in different aspects of the industry. But Bitcoin has no unique value at all. You won't see any coins coming out of your computer after you press on that buy button. Non-productive assets can be a distraction for most of the people who are trying to achieve their financial freedom. But we've got your back, because in this video, we're going to tell you guys why we, and Mr. Buffett, believe you shouldn't invest in crypto. Now, when you're buying a farm, you basically look at the crop every year to make an assessment about what you can earn through this asset. In general, you look at the asset itself and what it produces for you, or when we put it in the investing language, when we buy a business, we actually make an assessment about how we feel about it. In this case, you're actually buying something that will produce something for you in the long run. Whether it is in the form of dividends coming through an investment or money coming through crop production, you're always getting something other than what you bought in the first place. You have something that the asset produced. This is not the case with non-productive assets. All you're dependent on is whether the next person is going to pay you more because he was even more excited than you about another person who would actually pay an even bigger price. You see, the asset itself is creating nothing. This can also be said of something like gold. When you buy gold, the gold itself is producing nothing, although attractive it may be for you. You can sit in your room and watch it all day, but the asset is dormant. It is the cow which does not have any ability to produce milk for you. Let us just say that you bought a farm. Now this farm produces soybean and corn, so that when the harvest is done, you have the farm in the same condition as you bought it, but you also have the crop which will bring some money for you. But on the other hand, if you buy some crypto, you can watch it all day long and it won't produce anything. You've got to find somebody else who's even more passionate about Bitcoin than you in order to make a sale. In the end, it's just the same Bitcoin going around at different prices. Now, no doubt that it does create a rising price and a pool of people who want to buy it, and when people don't understand this greater fool theory, they get even more excited about it because if you buy a bond and it says it will pay you 4% a year, there are no birthday gifts or pleasant surprises for you because you know that you're going to get that 4%. But when you don't know the outcome, you will get excited. That's straight up philosophy. The same is not true for stock market investing. As when you buy a stock, you do it because you've seen some long-term potential in that stock, and you bought it because you thought that the stock was selling way below its intrinsic value, and by calculating the margin of safety, you're expecting huge profits in the bigger picture. You see, with Bitcoin, things are a lot more different because the value is merely based on speculation, which makes you vulnerable to losing your principal sum which you invested in buying crypto. According to Warren Buffett, every time you're buying a non-productive asset, you're actually relying on someone else later on to buy that non-productive asset because they simply think that they can sell that asset to someone for more money. Now, if you're simply dependent on someone else to buy your asset for more money, you can use that strategy with any product, let alone Bitcoin. Let's not forget that Bill Gross had a stamp collection that was worth a lot of money. People will simply buy the asset so that they can later make more money by selling it at a higher rate. When you're buying something simply because tomorrow morning when you wake up the price is going to be higher, you need more people coming into the asset than leaving so that the price can rise. But this system of transfer of the principal asset within a pool of people is simply bound to bad endings. With crypto, you're a lot more exposed to risk as compared to investing in stocks. Warren Buffett stresses that Berkshire Hathaway will never have any position in cryptocurrencies, regardless of the widespread speculation going around. And he is not ready to get his hands on all the Bitcoin in the world, even for $25. According to Buffett, investing in stocks that are producing something in the long run is way more safer and productive than putting your hard-earned money in crypto. With stocks, you hope for profits in the long run. But with crypto, you're simply dependent on other people with more excitement than you have. Now, cryptocurrencies cannot be valued like stocks. No doubt that the blockchain technology is here to stay, but it brings a lot of risks, such as exposure to speculation and not the true value, and exposure to fraudulent trading, potential for outright digital theft, and many more. With cryptocurrencies at the helm of most of the young investors trying to achieve financial freedom, it becomes extremely important to create awareness about achieving financial freedom through the right way, which can only be done through investing in the stock market with appropriate understanding of stocks. For that reason, we've provided a free guide in the description below which will explain the 6 different stock categories which every value investor should know about before putting their money into the stock market. Check out the video we handpicked for you, and we'll see you in the next one.